What's up, everybody? It's Friday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had a great trading day yesterday. Yesterday was our Traders Summit. Hopefully you were able to join us, see what it was that we did. We had some really great speakers. If you did miss it, we're going to have a recording available on tradersarmy.com soon. So go to Traders Army, sign up for a free membership. It'll be listed underneath our free classes. It may take a couple of days to get it up, but hopefully you get a chance to watch our recording. So let's go ahead and dive in, do what we do each and every day, looking at 10 to 12 futures markets from an educational perspective for both breakouts and reversals. But I will say yesterday was a good day to do a Trader Summit because there wasn't a whole lot of great trading out there yesterday, and I think much might be the same today. So let's go ahead and dive right in. The S&P this morning, we are down 1.5 points. We did have a potential trade yesterday on this little wick over wick area, but we called this wick over wick area here a confirmation entry. And the reason it was a confirmation entry was because we come close to it a couple of times and were unable to get in. And then we had basing here before the level, and if you notice, price just popped right through that confirmation entry, right? Gave us no reason to get into that short in this trade because it, following our rules. So now what am I looking at? Well, I think that we could potentially pop above here if we get basing, but I do have this area up here to contend with for a potential reversal right there. So you've got a very small window to make money on a breakout above here because of this opposing supply area. So if I wrap my lines around this opposing supply area, I don't know that would make for a phenomenal short, but it's really a decent level there. So I mean, it's still 10 points, right? 10 points in the S&P is $500 on one contract. So you can still give that a run and see if it gets you up to this region. I will say that overall, we're fairly entrenched in my favorite trend. That's not really my favorite trend. It's just not really a trend, right? We do have, if this swing high remains, if this becomes a pivot high and we don't make it back above this line, then we will have a definitive lower swing low and lower swing high. So this actually is a pretty important inflection point. Now I would say this: do not hold futures over the weekends unless you're comfortable with the exposure and the risk, as we're heading into a weekend where you could suffer a gap. So make sure that you understand how to protect yourself in case of a gap with using options on futures. Next, looking at the Russell. So in our Russell position, yesterday we did have this little level right here on the 60-minute, which is a wick over wick, but we had to switch this yesterday during our live trade room session from a limit entry to a confirmation entry because we came super close, didn't get filled. So we switched our entry style. And the same thing here as in the other markets, although the supply here is a bit closer to the breakout potential. And so I think we're still in between levels of demand and supply, so not a whole lot to do. In the NASDAQ, once again, very similar picture. Today sounds like a really great day to walk the dog. Don't be forcing trades on days like today when they're not there, which I just don't think that they're there on most of these markets. Next, let's take a look at crude oil. So in crude, yesterday, we had taken a look about a potential breakdown below 37, provided that we get basing inside of this level. Price came right to the level and then popped away, and we still have this as a potential if price comes back into that region. Was no real reason for me to get long down here yesterday, so we didn't try to play this back up. Although certainly, you could have given it off the doji a little bit of a candle to candle play, but ultimately it's rounding itself off. And so once again, supply above, demand below. There's no reason for me to force a trade. Crude oil yesterday, we talked about an iron condor, 1825 by 1725, with lots and lots of room on both sides of this one. So I think that's a valid and realistic play on that one. Quality demand exists right down below us here. Technically we could look and see if there's a breakout opportunity here, provided that we get quality basing, because we do have 1-2 touches, and then the basing in front of here would equal our third touch. If I don't get basing, if it just pops right through, then look for the potential on the reversal. Bonds and currency markets, there's not much in these either. So Today's really one of those days where I wouldn't go forcing things. In the ZN, we're still below our breakout point here, needing a bit of basing here and a chance to get in. If I even go to like a 15-minute, I don't have anything super clean to lean on, even on a 15-minute. There's a decent little level right here with this little doji area here, and then this one down below. So there's a potential right in here if you're so inclined to give that one a go. I think that's probably the only one that I would really add to my charts today. Worth looking at, but even that, if there's basing in front of it, it's going to invalidate it. In the Aussie, once again, nothing really has transpired to give us any strong additions. We do have a little level up in here that could be a decent reversal right there at the London Open. So I think that's worth maybe taking a look at right there if price comes back up into that region with any sort of speed. The euro, we had a little reversal trade here yesterday. Price came right back into this level and blew right through that area. But that area we blew right through, we had basing in front of it. And I say basing in front of it, it doesn't look like basing, but if you take a look, you had this drop here, this long wick up, price came back down, we came and just kind of based in here. So it limited your reward to risk on that trade. So if you took it, you got a small stop out. There's no, the basing made it a lot less probable of a trade. However, that basing then served as a target for the demand level below it, which was a confirmation entry. And this confirmation entry gave us an entrance because we traded all the way to the bottom and popped out. And so if you're still in that one, I think it's worth moving your stop up, locking in a little bit of profit. For now, I'm going to remove that level because that level's no longer valid. And then on the 4 hour, looking at our trend direction, we are in a very good meh sideways trend. So our meh sideways trend that we are still in tells me that looking for hourly reversal levels, there's not going to be a whole lot of super clean ones on there. So we move on to the Canadian dollar. And in the Canadian dollar, we have a little breakout potential below here if we continue to base in front of there. So look for a potential breakout below that line there. But we need to get quality basing before that's going to work. Great British Pound and Japanese Yen as our last two markets here. When I look at the pound and the yen, surprise, surprise, we're between supply and demand. It's just, there's not a whole lot here in the pound either. You've got a little area up in here that may become valid. If I wanted to take a look at that zone right up there, with that high upper wick, I think that may be the best reversal choice if price comes up into that region. And then the Japanese yen, we had basing right here in front of our demand level, which this was a good demand level. I mean, this is the origin of a strong rally in price. Price came into here, we based in front of it, thus invalidating the level. And now I think this could act as a kind of a line of control candle, but let's look a bit higher to this area here for our next kind of potential move in case we come up to that region. But right now, it's also very sideways. So with a day like today where we have so many markets that are in a sideways, kind of chopping around, you don't have to force a trade. And please don't force yourself into a trade. You don't have to trade every day. Today's a great day to take the day off. I would say that for most traders I run into, Friday's their worst trading day of the week because they force trades on Fridays. That might be a new t-shirt. Don't force trades on Fridays. So hope you guys have a great day. If you need something, give us a holler. Support at tradersarmy.com. Talk to you soon. See ya.